The broadcast is now starting. All attendees are in listen-only mode.
Okay, everybody, good evening. Neil Green again with you on the weekly webinar, just like every Tuesday. How you all doing? Hope you're doing good. Just want to do a technical check with you guys, see that you can see our screen and hear my voice. And I want to wait for another minute for everyone else to arrive, so everyone will get the webinar from the pointing star from the beginning. So you guys on GoToWebinar, first of all, I would like to welcome you guys joining us on Facebook on our homepage at itrader.com. Welcome. You guys on the GoToWebinar, you have a chat window. So if you have any questions during the webinar, you're more than welcome to ask. And of course, I would love it if you can just write me down that you can hear my voice, see the screen on our homepage at itrader.com, see that technically we're good. So we can start talk markets. So just let me know, just write me down something, and I want to wait another minute for everyone to arrive. All right. Okay. So I just wanted to wait for a few attendees to join us. This is Neil Green again with you on the weekly webinar. Doing this every Tuesday at 7 o'clock p.m. GMT time. And let's start. Okay, so this time we're going to talk about the NFP and the interest rate decision, which means we have two major events taking place this week. For us traders, major events is great. And let's talk about what we should expect. All right, so let's start. Okay, the rate decision and the NFP. Okay, guys, we're talking about the interest rate decision in the United States, which is the biggest and the strongest economy in the world, and we're talking about the NFP. Who knows what the NFP stands for? You guys, if you have had any experience trading during the NFP, do you know what NFP stands for? You have a chat window, just yes, you can just write down whatever. All right. Right, so the NFP stands for non-farm payroll, okay, which means measures the number of new payrolls in the US economy in the period month, which means right now is January. It's the end of January. The NFP is going to take place this Friday at the beginning of February, and we're going to get the job, unemployment, and wage information about the first month of 2018, January. All right, and let's see. Okay, so we have busy week for traders. Okay, you have to understand these two events are major events. Okay, these events are the kinds of events that traders are waiting for all year. Okay, these are the events with the most volatility in the market, and for us traders, volatility is very important because it means trading opportunities. Now, if we know how to recognize the direction where the market is going and what assets we should trade, all right, it gives us a lot of advantage on the market. So busy week for traders. Fed rate decision expected on Wednesday at 7 p.m. GMT time. I want you to set your clock to your local time. Okay, so if you're from the UK, it's going to be at 7 o'clock. If you're from Germany, for example, it's 8 and so on. If you're farther east, it might be GMT +2. So just check your local time. I'm talking GMT, okay? GMT at 7 o'clock p.m. On Wednesday. The biggest event in the United States, the interest rate decision. We talked about it on past webinars, and we will talk about it in just a few minutes. And the NFP will be published on Friday at 1:30 p.m. GMT time. All right. Now, both publications are expected to generate high volatility. So we're talking about two major events in the United States. The first one is on Wednesday at 7 p.m. and the second, this is the interest rate decision. And the second is the NFP, which will take place on 1:30 p.m. GMT time this Friday. And both publications, as we said, are expected to generate high volatility. Now, for us traders, high volatility means trading opportunities, right? Now think about it. If you're trading in the market without volatility, you cannot trade, right? We need the market or the assets to go certain direction. If you know how to recognize it, right, that's good for us. So high volatility, great for us traders. Now the dollar right now, let's talk about the dollar weakness. Okay, I don't know if you pay attention in the past month or so. The US dollar is very, very weak. Okay, it's the weakest that I remember. The dollar index, if you know, is currently trading below 90. Okay, below 90. Okay, not compared to other currencies, but the US dollar index itself is trading below 90. If we talk about the index, it's traded around 103 in early 2017. So I took 1 year back just to show you what happened a year ago. Okay, with the US dollar, it was traded around 103. The index itself right now is below 90. So it's the weakest that I remember. Okay, the US dollar in the past year. And the euro versus the USD and gold are trading on high levels. Let's explain it. Okay, so if the dollar is weak, all right. By the way, the euro is getting stronger, but this is a whole other story. We're not going to talk about it during this webinar. But if the dollar is weak, we expect to see the euro versus the dollar going up, since you see that the euro is the major currency and the dollar is the secondary currency. So if the dollar is getting weak, we will see the chart of the euro versus dollar goes up, because it means that the US dollar is weaker versus the euro. And gold is right now trade very, very high because of the reason that the dollar is very weak, and the gold is a safe haven for the US dollar. They work in opposite correlation. All right. Actually, all major currencies, especially the US dollar, when it's weak, all commodities are high, especially gold. You know, back in the days when we wanted to know how much money a country has, all right, we had to check how many ounces of gold they have. And since then, gold became an asset that have an opposite correlation with major currencies, especially the US dollar. And the US stock market is trading on a negative correlation with the dollar, and I'm going to explain in just a second. You cannot see the screen. Are you the only one? Kath says she can see the screen. Can you guys see the screen? Are we good? Is there anyone else that has this technical problem? Okay, let me check again. All right. Maybe I met. This is why I asked at the beginning. Just a second. Are we good now? Kate, can you see the screen? All right. So you see, it was my bad. This is why I asked. All right. Okay, so let me show you. Okay, so let's go to the beginning. Okay. This is exactly why I asked, and thank you, Kathy, for letting us know. So I talked on. Let's go from the beginning. We're talking about the rate decision, okay, and the NFP. Okay, busy week for traders. I'm gonna go all over again from the beginning since you couldn't see the screen. So busy week for traders. Fed rate decision expected on Wednesday. Okay, you can write it down. UK time, GMT time at 7 o'clock on Wednesday. Interest rate decision, the biggest event in the United States. And we have the NFP that will be published on Friday at 1:30 GMT. Right now, everybody can see the screen, so we're good. Right, both publications are expected to generate high volatility. Are we good so far with the first page? Just in general to show you what we're expecting. Great. Now, dollar weakness, we talked about it. Dollar index is currently traded below 90. The index traded around 103 in early 2017. So just wanted to show you the difference on the US dollar between last year and this year. All right, and euro versus dollar and gold are trading on high levels since the US dollar is very weak right now. So the euro is stronger versus the dollar, right? We trade on the ratio between these currencies when we trade Forex. So euro versus the dollar is very strong, and gold is very strong. If you want to see it on the MetaTrader, pretty easy. You got it, euro versus the dollar. Let's go on a daily chart, okay, monthly chart, okay. Each one represent 1 month. You can see in the past 3 months, especially this month, okay, of January. This is which ends today, tomorrow. This is the candle. You see this green candle? You see how the dollar got weaker, right? The euro is getting stronger versus the dollar, okay? If you take the dollar versus the Japanese yen, you're going to see a big red candle. Same thing on the pound, green, and euro green since here the dollar is the secondary currency. So the dollar is really getting weak right now. There are many reasons for that, but we're not going to go into it, but just for you to get. And gold, the bigger picture, and gold, if you go to XAU versus USD, gold versus the dollar right now in the past, this is a monthly chart, all right? Each candle represent 1 month. You can see in the past 2 months, okay, that the gold is getting stronger. We talked about the opposite correlation between the US dollar and gold. And I think these correlations are very, very important, because if US traders want to diversify your portfolio, all right, and I'm talking about it every webinar, not put all the eggs in one basket, which means trade on a few assets, then we have to understand the correlations. Okay, this is one correlation, US dollar and gold, opposite correlation. Usually if I go with the US dollar, I will go against gold and the opposite. And not only that, what I wanted to show you is this. So euro, dollar, and gold, we said, and US stock market is trading on a negative correlation with the dollar. And let me explain. All right, let's play again. Let's say I have 100,000 pounds, euros, dollars, doesn't matter what I have. All right, if interest rate goes up, all right, if interest rate goes up, where would I prefer to put my money? Right, I have 100,000. Right, we have inflation, which means everything is getting more expensive, and I want to keep the money of the value of the money, maybe even make some revenue over my money, right? So I have a few options. One is to put the money in the bank, okay, to close it in savings. I don't know if you ever had a saving account, right? You go, you put the money, you close it in the bank in a saving account, and then you're supposed to get rate from your bank, right? So if interest rate is high, all right, interest rate is high means you're gonna get more money for your money with non-risk, right? So if interest rate goes up, okay, think about it. If interest rate goes up, means that people will put the money in the currency in the bank, and they should take it off somewhere, so they sell stocks, right? Because if I buy stock, I don't know, let's say I don't know if it's going to go up or down. So if I sell stocks, then the stock market is going down. So as you can see, US stock market is trading on a negative correlation with the dollar, which means the US stock market right now is the highest level ever. It's booming up, right? Except for the last few days. If you go and take a look at the Dow Jones, for example, you see the monthly chart booming up, taking a look at the S&P and so on, and NASDAQ. All right, so right now the US stock market is getting really, really stronger. US dollar is going down. We said negative correlation. So not only the gold has a opposite correlation with the US dollar, the US stock market as well. Since if interest rate is low around the world, around the Western world, people want to look for other ways to invest to get a better rate. So they go to the stock market and they buy stocks. So value of stocks is flying up right now. Good. Let's keep going. Let's talk about, okay. Now, the rate decision could generate between 50 to 100 pips movement by euro versus the dollar. Okay, we're talking about 50 to 100 pips movement by euro versus the dollar. Interest rate expected to stay at 1.5%. All right, where can you find it? You can find it, by the way, on our website, or you can go here. You see on Forex Factory. Let's go to January 31st, which is tomorrow. The interest rate decision will take place tomorrow, right? Today is Tuesday, tomorrow is Wednesday. If I'll go tomorrow, scroll down to 7 p.m., you can see the federal funds rate. Now, there are two things that I want you to pay attention, right? First of all is the federal funds rate, the interest rate decision that I just talked about. Is you see the forecast is expected to stay the same at 1.5%. Now let's talk about history. 2017, we had 3 hikes. At the beginning of the year, the interest rate was 0.75 in the US, and then it went up to 1%, 1.25, and at the end of the year, in December, the Fed has decided to raise interest rates, since the stock market was very strong, from 1.25 to 1.5%. It's supposed to stay the same. This is the forecast of the analysts for tomorrow at 7 p.m. We expect interest rate to stay at 1.5%. And we have, you see the FOMC, the Fed statement. Now, I want you to check tomorrow, okay? If interest rate stays, of course, if it's going to be higher, it should be supportive for the US dollar. And if we're going to have a negative surprise, which it's like almost impossible, we expect the dollar to go negative strongly. And I want to give you a few details because a lot of people ask me, okay, if I trade the interest rate decision, always when I see the results themselves, okay, I see a lot of movement, a lot of volatility, which is great, but I don't know what direction the market should go, or the US dollar or gold and so on. Because if interest rate is supposed to stay 1.5%, and if tomorrow I'm going to see on the result themselves 1.5%, what should I do? How can I read the market as a trader? What I'm saying, okay, there are a few more things that I want you to check. Okay, if interest rate stays as expected, 1.5% tomorrow, we have, you see the statement itself. Now on the statement, I want you to click on that and check this. Look at this. The rate decision we said can generate between 50 to 100%. Okay, interest rate expected to stay 1.5. Annual forecast expected to be 3 additional rate hikes. Okay, in 2017, we had 3 rate hikes in the US. The Fed have decided to raise interest rate 3 times, and we have the same expectation for 2018. Now, every rate decision, okay, right with the rate decision itself, we have the statement, okay, of the Fed. We're talking about 16 members of the Central Bank of the United States of America, the Federal Reserve, and they have a statement. Now, reading the statement, we can see if they expect less or more than 3 hikes during 2018. And this is like a forecast for the whole year for interest rate in the United States. And this is the most important thing. If it stays on 1.5%, I want you to go to the statement. Okay, read the statement and try to see. Of course, you can hear it on TV and so on, but you can read it at the same second. Try to see what is the annual forecast, the yearly forecast for hikes, for additional rate hikes. Okay, any surprise, higher or lower, could generate 150 pips movements. Okay, bank stocks could move together with the US dollar on publication. US dollar and bank stocks, okay, we have to separate the US stock market with the US bank stocks. US bank stocks are working with the same correlation with the US dollar, and let me explain. If interest rate is higher, right, banks are making more money. They give out loans, the payments of the loans of the people that are taking the loans are higher, and banks making more money, which means right now the banking system is traded very, very high. Okay, if you take a look on JP Morgan, the highest ever, by the way, okay, since interest rate is going up all the time. You see monthly chart, you can see that it's flying up. Goldman Sachs flying up in the past few months, Citigroup, and so on. So looking at the banking system, all right, we look at the US bank stocks. It looks very good. You see, even back in the days, I put in a resistance line that was broke here. Okay, it went through. So the banking system looks very good since interest rates are going up, and the US dollar and the banks are working on the same correlation. All right, higher interest rate is good for the banks, which means they're going to make more money off their loans, mortgages, and so on. And of course, if we have a bad surprise, which means under 3 hikes, additional rate hikes expected for 2018, we expect this is a negative surprise, and then we expect not 50 to 100 pips, but a 150 pips movement. Right? Just to put it in numbers. Okay, let's just put it in numbers. Let's open a calculator, guys. Make it easier on you. Okay, if I'm taking, for example, $10,000, all right, and I'm getting a leverage of 1 to 200, right? So I need only 500 euros, or if you trade on the euro versus the dollar, I need only 500 euros in order to take one lot. All right. So if I have 10,000 euros, let's say, and I need 500 for one, I can trade with 20 lots. All right, which means it's $200 per pip. And if we talk about the movement of 150 pips in the first hour, so we're talking about $30,000 out of 10,000. So, all right. So just for you to understand the volatility of the market either way. All right. Good. Yeah, it is nice. Okay. Are we good with this one? Can we go on? You got the correlations? All right. Now the NFP could generate, we talked about the interest rate decision. Now I want to talk about the second event, which will take place on Friday. Every first Friday of the month at 1:30 p.m. we have GMT time, of course, we have the NFP, which gives us the mirror to the US economy through unemployment rate, through new jobs, new payrolls, the wage, and so on. And the NFP could generate between 60 to 100 pips movement by euro versus the dollar. This is what we generally see. Of course, if we're going to have big surprises, we expect a bigger movement and so on. Economy expected to have added 180,000 new jobs. I think that the number I saw was 184. Let's go to Forex Factory. Let's go to, this is Wednesday, Thursday, and Friday on February 2nd. You see three things. 1:30 p.m. GMT time, we have the non-farm payroll, the NFP. As I said, 184,000 new jobs. We're talking about all of January, okay? We get the report on the beginning first Friday of February, talking about January 18. So we expect 184,000 new jobs. Let's see how much we're gonna have. Unemployment rate is supposed to stay at the lowest ever, 4.1%, very low. Everybody's working in the States. And average hourly earnings is expected to rise by 0.3%. Okay. Now let's see how we can try to trade after we see the results themselves. So going back to the PowerPoint, where were we? The NFP, okay. Economy expected to have added 184 actually new jobs. Average hourly earnings, as I showed you, expected to have risen by 0.3%. All right. These are the forecasts that we have it already. Volatility traders are looking for a match. All right. Same direction between jobs and wages. A match could generate 120 to 150 pips movement by euro versus the dollar. And let me explain. When we talk about a match, since unemployment rate, okay, unemployment rate right now is over, we're talking about over 95, almost 96% out of the Americans that can work are working. All right, not including people that cannot work, or children and you know, old people on pension, so on. People that can work are working, and we're talking about 4.1% unemployment, which means that the rest, okay, 95.9% out of the Americans that can work are working. We're talking about full employment. This will probably stay, it might be 4% or 4.2, it's the same. All right, unemployment rate very, very low, lowest ever. And then we want to see, okay, these two numbers. Now at 1:30 GMT, we're going to see these two numbers on Friday. If the NFP is higher than 184 and the average hourly earnings is higher than 0.3%, which means it beats the forecast on both, we have a match. Okay, if we have a match, all right, we expect a movement between 120 to 150 pips by the euro versus the dollar, which means, okay, if it's supportive, of course, for the dollar, we expect the euro versus the dollar to go down, right? Since the euro is the major currency. And if the results are negative for the euro versus the dollar, we expect the euro versus the dollar to fly up. So in general, okay, the NFP could generate 60 to 100 pips movement. But if we have a match, which means if the the salary, the average hourly earnings, okay, and the NFP itself, the non-farm payroll, will be matched on, of course, if it's going to be, let me give you an example. If we have 184,000 forecast, and then it's going to be only 70,000, and average hourly earnings stays at 1.3% as expected, all right, so we expect the dollar to go negative, all right? Of course, the difference between the forecast and the actual number is very important, as high as it is or low, right? So a match could generate 120 to 150 pips movement by euro versus dollar. Of course, you can diversify your portfolio. Again, remember the dollar works on an opposite correlation with gold. And okay, the rate decision could generate, oh, we were here, sorry. Okay, assets to trade on both events will be the US dollar versus all majors. When I talk about majors, it's the euro versus the dollar, the US dollar versus the Japanese yen, the Great British Pound versus the dollar. Okay, these are the three major. Of course, you can trade on versus the Canadian dollar and so on. But major ones: euro dollar, pound dollar, and dollar Japanese yen. Traders can add bank stocks trading. We talked about it. Same correlation with the US dollar. Higher interest rate or higher expectation for interest hikes in 2018 when we look at the statement tomorrow at 7. So traders can add bank stocks trading on Wednesday and gold trading on Friday. Actually, on the interest rate decision tomorrow as well. Traders are recommended to generate trading setups on all assets, which means the trading setups could represent support and resistance levels before publication, right? I said every webinar, I will repeat it again. Before you take a trade, okay, it doesn't matter if you trade a fundamental event like these two events, the rate decision and the NFP. You want to choose your assets and you want to put some support and resistance levels to understand the lows and the highs when we talk about prices, because a smart trader is a trader that knows two things. First, he knows how to combine the technical analysis with the fundamental analysis, and this is a smart trader. And the second thing that he knows is when to get out of the trade, right? I don't know if you remember how many winning trades you had and you had profits and you didn't know whether to close the trade or to wait some more. And this is where we have the support and resistance lines, the technical analysis, in order to help us the traders to understand if we had a movement of 60, 70, 80 pips and so on, all right, or 150 pips, right? We talked about the differences in both events. Before even the event, I would like to put it's smart to put some support and resistance lines to understand the highs and the lows, and then to understand, try to understand your trade better by combining the fundamental analysis and the technical analysis. And of course, good luck. Guys, any questions? Anything you would like me to clarify? I'm here. You can write it down on the chat window. Again, you guys on Facebook joining us on iTrader.com. Next time, all you have to do, all right, just go down here. You have it on webinars. You see under news, webinars, or you just can scroll down here. Just click on join our webinar, save me a seat. Put in your first name, last name, and email address so we can contact you back on our homepage at iTrader.com. Of course, this service is for free. I'm here every Tuesday at the same time. Might be, but from next time on, it might be on 8 p.m. GMT time, maybe 1 hour later. We're checking it because we want to see, we want to give more traders opportunity to listen. And I hope you have that you'll trade smart. I would like to thank you very much for participating today, and thank you, Kathy, for being with us every week. And I'll see you here next week. So have a great evening. Thank you. Bye bye.